Hi, I'm Pattu from freefincal. This is my stock portfolio as on December 2020. Regular viewers may know that I had shared my portfolio earlier in September 2020 and also last month in November. And I had showed how things changed in September 2020. Hindustan Unilever was a very big chunk in my portfolio, almost 31%. Then I brought it down over the next couple of months to a more manageable 19%. Also, I had some small stocks like Godrej, Coal India, IOC, and so on. And then in December 2020, I decided to cut short the portfolio, make it a 10 or 11 stock portfolio, and I got rid of all these small weights. And the major reason I got rid of IOC, Coal India, and Godrej Consumer Products is because they were in loss. And yesterday or day before, I had said that I had reduced my equity allocation for my son's future portfolio from 67% to about 54%. That's like the 12 to 13% reduction. And because of that reduction, I would incur capital gain. And to reduce that capital gain and to offset that, I decided to get rid of these small weights. They were anyway very small exposures, and they were in loss. So I thought, why not get rid of them? There's no other reason. There's no big analysis or anything involved. I just thought it's an opportunity to trim down the portfolio, and I got it down. So Hindustan Unilever is now about 18%. It's Asian Paint 17, and so on. So the top five stocks still dominate the portfolio, but I'll try to bring it into a much better balance in the coming months. So that's about it. For those of you who are new, I don't do any kind of balance sheet analysis or fundamental analysis. I don't do any kind of analysis. I don't want to do any kind of analysis. My stock portfolio is simply the example of a rich guy throwing money at a problem. That's all. To be very, very honest, that's all there is to it. I don't mind buying expensive stocks, and I just buy expensive stocks. I think many of these stocks, if you notice, are at least the minimum cost is 1,000 rupees plus. I think except for ITC, couple of others, the dominant price would be 1,000 rupees upwards, and I don't mind paying that price. My requirements, if I should say, is some kind of strategy. Is solid or sound financial health, low debt, reasonable dividends if possible, and low volatility in the price. So that's about it. And other than that, I just spend a few minutes of my time, sometimes even less than that. I have earlier talked about simplywall.st. I use that website. I'm a paid member there. I use that website for my analysis, so to speak, but I don't do much of it. And as long as things look reasonable there, I just go ahead and buy it. But that's about it. But don't take my strategy. There's not much of a strategy. Don't take my way of doing things too seriously. Like I said, I'm just throwing money at a problem. And my logic is that if a stock tends to trade close to its all-time high more often than not, then no matter how valued the stock is, it's the market likes that stock and is willing to pay that price for that stock, and that's fine enough. That's good enough for me, and that's about it. And as long as that price is not too volatile, I'm very happy to buy it. I'm still in the process of finding out my CAGR, taking into account all the dividends and so on. Last time I did, like I mentioned, I spent about 2 hours entering all the transactions. Something went wrong, and I got some negative number that can never be, because I was even in November the portfolio was in green, and in December obviously it's a lot more greener than in November. So there's something wrong somewhere. I have to figure it out. Hopefully I will try and do it within the next few days for my audit. But it's a real pain taking into account all the corporate action, the splits, the dividends, and so on. That's what I was hoping simply Wall Street would do. But I'm not impressed with what it did. I did it once right for the first time. I shared that in September, I think. But I was not happy with what happened last time. Let me try one more time, and let's take a call on based on that. I mean, I would take a call based on that. But this is just for information that I'm doing it. This is an experimental portfolio, but it's it's not a small portfolio. It is quickly becoming larger. I think last year it has almost doubled or tripled in size, more than that over the years. So it's no longer a small portfolio, but although it's experimental, I want it to be robust, and even if it serves as an emergency fund, um, one unit, one component of my emergency fund, that's good enough for me. But that's all there is to it. So just for information, don't take me seriously. But if you do want to start low volatility investing, then you can use either my screener, or you can use the indices, and buy a solid stock with low price volatility, and that's any day better than buying a small cap or a mid cap stock, hoping for things to suddenly move up, or buying IPOs and waiting for listing gains and so on. I hate that sort of thing. This is a slightly safer way, I would say, of investing in the market. That's all I have to say. Bye bye.